Your bank may be safe, familiar, and convenient, but staying loyal could quietly cost you thousands over time. Most people never compare their savings rate after opening an account. That habit can become surprisingly expensive.
Imagine keeping $10,000 in savings while another bank pays several times more interest on the same cash.
The money is still yours. The difference is what your bank does with the chance to use it. Right now, this gap matters. In the US, the national savings rate is about 0.38%, while top accounts reach 4.5%. That does not mean every high-rate account is better. Rates can change, limits can apply, and convenience still has value. But loyalty becomes costly when you stop asking one simple question. What am I earning on my cash today?
Your bank does not need to be bad for another bank to be better. That is the part people often miss.
You may love your branch, app, staff, or history with the bank. None of those automatically increase your interest. Think about it like shopping for insurance. You would compare prices before paying a large bill. Your cash deserves the same attention.
Now consider fees. A small monthly charge may look harmless, but repeated for years, it quietly eats into your financial progress.
Then there is convenience. Keeping every account together feels simple, but simple does not always mean financially efficient.
Here is the hidden cost. Cash can look safe while slowly losing buying power when its return stays too low.
That does not mean investing every dollar. Emergency cash needs access, while long-term money needs a different job entirely.
The smarter question is not where to put all your money. It is what job each dollar needs to perform. Once your cash has a clear job, the next advantage is time. Small moves can matter greatly when you keep making them. The first year may look boring. Years later, that same habit can become one of the strongest parts of your financial life.
The danger is not only choosing badly, it is also changing your plan every time fear makes the market look scary.
This is where the hidden leak gets serious. Small costs can keep stealing money that could have stayed and grown.
So open your statement, look for fees, weak returns, and services you never use. The boring details may reveal the real problem. Do not switch blindly either. Compare the rate, fees, access, rules, and safety before moving your money anywhere. A higher rate can look exciting, but never let one number make the whole decision for you. Use 4 checks. Know your needs, compare returns, check fees, then review the setup again every so often. The goal is not to chase every new offer. It is to make sure your money is working where it should.
The strongest money system starts before payday, not after it, when every dollar has already found somewhere to go.
When money gets a job before you spend it, saving stops feeling like a fight against yourself every month. Smart spending does not mean buying the cheapest thing. It means knowing what gives you real value for your money.
A budget should not make life miserable. It should help you enjoy today without quietly stealing from tomorrow.
One choice rarely changes your life, but repeated choices can build a future you either love or regret.
You do not need a perfect money life. You need a clear system that protects today while building something better for tomorrow. The goal is balance, not punishment. Your money should cover real life while still leaving room for your future.
The hardest part is often not earning more. It is refusing the small temptations that keep draining what you already earn.
A short money review each month can catch problems early before one small mistake grows into a much bigger setback.
You do not need to watch your money every hour. You need a simple routine that keeps you aware and in control.
That is the real shift. Stop reacting to money problems and start building a system that prevents them.
Once your system is clear, money feels less confusing because every dollar has a reason before it leaves your hands. Give each part of your money a purpose, and you will make fewer rushed choices when life suddenly gets expensive. A plan gives you something powerful, a reason to say no when an exciting purchase feels impossible to resist. This is why cash reserves matter. An emergency fund turns a painful surprise into a problem you can actually handle. Without that cushion, one bad week can force borrowing, and borrowing can make the next month even harder to survive.
Financial progress looks boring. Track, save, reduce debt, automate, and repeat. Small steps build a better future.
The reward is not one perfect month. It is reaching a point where your money finally gives you more choices and less stress.
You do not need perfect discipline every day. You need simple systems that keep your better choices working even when motivation disappears.
Real financial freedom is not about looking rich. It is about knowing one setback will not destroy everything you built. Start with one better money rule today. If this helped you, like, subscribe, and share it with someone building their future too.